Welcome back to The Explainer. Today, we are essentially setting up the operating table for a really fascinating financial autopsy. We're looking at one of the absolute wildest, most perplexing trading sessions of 2026. On April 27th, the Orca token, which is a major decentralized exchange asset over on the Solana network, experienced this massive, violent price spike and then followed it up with an equally dramatic crash. I mean, what drives a token to suddenly rip upward only to lose all of its gains and then some in just a matter of hours? Was it a fundamental shift or was it just pure unadulterated speculation? Well, we're going to break down the exact anatomy of this trade using the hard data. Okay, let's dive into this. 641.56%. Just take a second to let that number sink in. This is not a price gain. This staggering figure represents Orca's extreme volume to market cap ratio during that single session. We're going to unpack exactly what this mathematical anomaly means for the market in a minute, but spoiler alert, it signifies a frenzy of capital changing hands at a speed that is literally impossible to sustain on a normal trading day. So here's our roadmap for making sense of all this chaos today. We'll start with the anatomy of the flash spike, unpack that massive volume anomaly, look at the broader Solana DeFi rotation, dig into fundamentals like Whirlpools and TVL, discuss security as a catalyst, and wrap up with the technical outlook. All right, Section 1, Anatomy of a Spike. Let's map out the price action. You know, the setup here was actually deceivingly quiet. For nearly the entire month of April, from the 1st through the 26th, Orca was just chilling, consolidating in this really tight range between 80 and 99 cents. But then, April 27th hits. The token breaks out hard. It smashes right through heavy resistance at $1.20 on massive volume. And it didn't stop there either. It triggered a violent spike, hitting a session high of roughly $2.10 to $2.20. But here's where the whiplash comes in. What followed was an equally sharp rejection. By the close of the session, the token retraced all the way back down to $1.28. That's a painful 20.29% loss on the day. So you've got this massive intraday surge that just gets completely wiped out, turning deeply negative by the close. Moving on to Section 2, Volume Anomaly. Let's analyze this massive disconnect. Now, what's really interesting about this slide is the sheer scale of the disconnect between the protocol size and its trading activity. It's staggering. We're talking about a 24-hour trading volume of $492.38 million against a token market cap of only $77.99 million. That's where we get that massive 641.56% volume to market cap ratio. Nearly 6.5 times the token's entire market value changed hands in a single day. To put that into perspective, most established exchange tokens sit well below 30% on a normal day. So when you see a ratio blast past 100%, and certainly up into the 600s, you are looking at the unmistakable fingerprint of pure speculative rotation. This is fast capital cycling rapidly through the asset. And making things even crazier, this dynamic is massively exacerbated by a liquidity to market cap ratio of only 3.31%. Basically, the actual on-chain liquidity, the funds readily available in the order books to absorb buy and sell pressure, is incredibly thin relative to the overall market cap. Think about it. When you have nearly $500 million in volume trying to squeeze through an order book with only a few $1,000,000 in resting liquidity, it naturally amplifies any momentum shift. This structural bottleneck is exactly what turns a standard breakout into a massive $2 overshoot and a regular sell-off into a punishing crash back to $1.28. Which brings us to Section 3, the Solana DeFi rotation. Let's look at the ecosystem-wide action. Now, if this was just an isolated event, the rest of the market would have been pretty quiet. But on the exact same day, Raydium, which is Orca's closest competitor on the Solana network, posted massive gains of 24.5% and saw its own huge volume spike. Meanwhile, the base layer token, Solana itself, it barely moved at all, closing down just 0.6%. This visually proves a really essential point. This wasn't a broad market rally, and it wasn't a Solana-wide event. This was a highly targeted rotation of capital, specifically into Solana's DeFi infrastructure tokens. Speculators were very clearly placing massive bets on decentralized exchanges. Let's pivot slightly to Section 4, Fundamentals and TVL. Let's look under the hood. And this brilliantly illustrates the core engine of the protocol, Orca's flagship product, Whirlpools. Introduced back in mid-2022, Whirlpools use something called concentrated liquidity. So instead of spreading a liquidity provider's capital evenly across every single possible price from 0 to infinity, it allows them to allocate their capital within very specific, targeted price bands. This creates a powerful efficiency flywheel. Because the capital is concentrated right where the actual trading is happening, it generates higher fee income per dollar deployed. And that naturally leads to tighter bid-ask spreads for traders. Better yields attract better market makers, which in turn attracts more volume. It's a pretty elegant system. And that efficiency, it definitely shows up in the hard metrics. Take the total value locked, or TVL. There is $260.77 million of actual capital deployed in Orca's liquidity pools. Yet, as we discussed earlier, the token's market cap sits at a mere $77.99 million. This gives us a market cap to TVL ratio of just 0.30. In the world of decentralized finance, this stark contrast highlights that the protocol is structurally undervalued relative to the actual tangible capital utilizing its smart contracts. This disconnect between deep on-chain utility and a low token price is exactly the kind of setup that attracts smart, patient capital looking for an entry point. It's also worth taking a quick look at the token supply dynamics. The Orca token grants holders governance rights over crucial protocol parameters, things like fee structures and treasury allocations. Currently, the circulating supply is 60.79 million tokens, with about 14.20 million remaining to reach its current total supply of 74.99 million. Now, it's important to note there isn't a hard maximum cap baked into the protocol forever. But with the majority of the current supply already circulating, that fin liquidity we talked about earlier, that's really a function of market behavior, not just locked up tokens. Next up, Section 5, Security Catalyst, Finding Safety in Solana DeFi. So the crucial point here is understanding the market psychology at this exact moment in April 2026. Just weeks prior to this spike, the Solana ecosystem got severely rattled when the Drift protocol suffered a massive $350 million hack. As you can imagine, confidence was seriously shaken. But in the immediate aftermath, Orca's CEO, Michael Wang, came out and publicly confirmed that all user funds on Orca remained completely secure. And this wasn't just PR spin. Orca is backed by 4 independent smart contract audits and an ongoing bug bounty program. So when traders are looking to rotate capital back into Solana DeFi, they desperately want reduced counterparty risk. Orca's pristine, highly audited infrastructure essentially became a relative safe haven. Now, a strong track record doesn't solely cause a 600% volume spike, but it absolutely creates the baseline trust required for large players to even consider parking their capital there.
Finally, Section 6, the technical outlook. Where do we go from here?
Let's move to and see how this builds a clear technical roadmap now that the speculative dust has finally settled. Right now, the token has essentially established a current floor around that 125 to 128 mark. For the bulls to really regain control, the absolute critical support zone it needs to consolidate above is between 119 and 125. If it loses that, we could easily see a retest sub $1. On the flip side, any future upside attempts are going to face heavy, established resistance at 150 and above. But, and this is the context that keeps traders glued to their screens, Orca has an all-time high of $20.33. From a structural standpoint, there is just enormous headroom if the protocol continues to capture Solana's decentralized exchange volume.
And that brings us to the ultimate takeaway of this explainer. We've seen a massive speculative flush today. That 641% volume ratio is eventually going to normalize. But beneath all that crazy volatility, you have a protocol with $260 million in value locked, a highly efficient automated market maker, and a bulletproof security record. So the question you should really be asking yourself right now is, will genuine protocol demand step in where the speculators stepped out? If the underlying utility actually continues to grow, this wild trading session might just end up being a chaotic blip on the radar of a much larger structural shift. Thanks so much for joining me on this explainer, and as always, keep your eyes on the data.